We're back. Now to our chart of the day. It is Corning because it's rallying after raising its second quarter guidance. It is the best performing stock in the S&P. It has hit its highest level since February of 2022. It is on pace for its best day since January of 2022, and it is also on pace for its fifth straight month of gains. Josh Brown joins us on the phone right now because he owns the stock and he added to it. Well, he bought it on May 21st. Talk to me.
Judge, am I good at this or am I good at this? What are you thinking?
Hey, on this one, you're good.
Here's the deal. I get really excited when I get one right as quickly as this one went right. But one of the secrets to doing that is to hang around the goal. So what does that mean in the context of stocks? My shopping list is more likely to be the 52-week high list than the 52-week low list. And Corning technically has been rampaging back to this 2021 high all year long. The news today, which is the company basically coming out, raising guidance, is that they're raising guidance for exactly the reason I thought they would. You cannot build data centers for trillions of dollars and not order more optical components and not order more glass. And that's what this company does, plain and simple. So that's the story today, took numbers up, and I think you'll see analysts follow suit tomorrow. I'm not taking a profit here because I still think this could be a $50 stock by year end.
Yeah, so they now expect their core sales of approximately 3.6. That's versus 3.4, and a return to year-over-year core sales and core EPS growth because of their new optical connectivity products for generative AI. So it's one of those AI plays probably not talked about enough.
Today is the day that Corning became an AI stock. So now the effect is going to be you're going to see people throwing it in their baskets when they create their AI strategies. You're going to see hedge funds that would never in a million years be interested in an industrial glass maker start to, kick the tires. You're going to hear more people on the earnings call at the end of July when they report, more analysts that you haven't heard from before, maybe even the buy side. And you'll see the ETF scoop it up at a certain point if the index providers add it. So this is like one of those virtuous circles. We saw this take place with SMCI, which obviously, I don't expect that same kind of performance here. But we've seen it with a number of stocks where they just get swept up thematically, and then your work doesn't sell for you. So that's what I think could happen here. And then, of course, it's going to now trade like a tech stock, which means maybe more volatility. So that would be the risk.
Let me get your take before I let you go. Back to your swing lesson. On the big week ahead we have, because it is a big one. The Fed chair's on the Hill. You got some data. How are you feeling about things this week? And then I'll let you run.
So I don't feel like there's going to be any kind of a surprise. Originally, I had thought July could be like a surprise in play to show the world that they are actually data dependent, but they're not going to do it. I'm listening to Neil Dutta at Renaissance, at RenMac, and his take is they're going to use July to set up September. I think they'll use Jackson Hole the same way next month. And the whole thing will be very choreographed, very telegraphed, rather. And I think the market's okay with that. And that's why we're at all-time highs.
All right, good stuff. I appreciate you spending the time with us. We'll see you soon.